Banks tell you to keep your money in the bank, but they don't keep their own money in the bank. By the end of this video, you'll learn exactly why you should be doing exactly the same. My name is Darius.
And I'm Carmen. I think it's important for all of us to understand first and foremost is just why are the banks in business in the first place? Because I think for us, whenever we had income, we just knew we would walk over to the bank and drop our income there. And that was the basics. But a lot of times we do business with financial institutions, with anyone, and we don't really understand how the business works and operates. So that's why today we want to make sure that you understand how banks function so that you can make the best decision for yourself as far as where you should house your money.
Right. And first and foremost, banks are held to a standard by the Federal Reserve, right? And basically Federal Reserve banking, just to jump right into this whole conversation, is the banks have to keep a certain percentage of money in the bank. Money that you deposit in the bank, they have to keep a certain percentage of that in the bank. That's 10%.
Yeah. And really quickly, some of the vocabulary that we'll use, like, for example, when we say deposits or depositors, you are a depositor, for example, because you go to the bank and deposit money. And so when we talk about deposits, the bank has to have so many deposits on hand, meaning all the money that we collectively store in the bank, they have to have a certain percentage of that on hand.
Right.
Continue.
And
Sorry.
that is 10%. At least that was 10% prior to the pandemic. But now they reduced that to where they don't have to have any of the money deposited in the bank. They don't have to keep any of that in reserve. So what does that mean for us? The money that we see in our bank account, does that mean that it's not there? Well, it's not, but we get what we see is in the form of digital currency.
Well, hold on one second, because I think this concept can be foreign to people who don't understand how banks work. So to back up, because what you just said, that's a little scary for somebody who may not understand. Like, wait a second, they don't keep my money? Like, what do you mean?
Right.
So what I want to say is, prior to the pandemic, the banks were supposed to keep 10% of all of our collective deposits in the bank, right? So if Darius goes to the bank, I go to the bank, Jim, Bob, Susie, Joe, 10% of that should be at the bank, which is already a little concerning already, because then where's the 90% going?
Right, because the problem is if everybody decides to go and get their bank at the same time,
Get their money
at the same time, it won't be available because they only have a small percentage of the money that everybody collectively put into the bank on hand.
Yeah. So these are things that you need to start understanding about banks. So if there's 90% that is unaccounted for this example, what's happening with it? Where's it going? What's it doing? And that's something that we'll jump into with another point. But I just want to make sure that we understand that prior to the pandemic, the banks were only required to keep 10% of all of our deposits on hand at the bank. After the pandemic, that's no longer the case. So now the question is, what's happening with the money that we're depositing in the bank?
Exactly. Now, the money that we deposit into the bank is a liability to the bank. The reason being is they owe us money for that money that they have sitting there.
When you go for the withdrawal, you pull up to the teller and say, hey, give me my money. The banks now have to pull that money from somewhere, since they're not required to have these stipulations on hand.
Right. And it may be a very small amount of interest that we earn, but the 0.01% interest that we earn is a liability. And the only way to turn that into a liability is to create an asset out of it. And they create assets out of our money by lending it out in the form of credit cards, mortgages, car notes, things of that nature, personal loans, all those things. That's how they create assets out of our liabilities.
Yeah. So going back to the business of banking.
Because it is a business, first and foremost.
Yeah.
It's a business.
It's a business, first and foremost. And the main thing is we're not talking trash about the banks. We're just saying, matter of factly, this is what it is. And we're very oversimplifying this process, again, just so that everyone can track. So that there's two parts of this. So the first part that we were talking about is deposits. The whole reason why the banks allow us to put our money in the bank is because where else would you put it?
It's a storage facility.
It's a storage facility. You know, like the storage facilities that pop up all around every corner. It's a storage facility for your money. So the reason the piece of that is they have to make it enticing for you. They say, okay, if you store your money with me, then I'll pay you a little bit of interest,
Mm-hmm.
right? And that's what Darius was talking about. So that's why the banks, when you think of a business, anytime a depositor puts money into the bank, it's a liability for them. Why? Because now they have to hold your money, and then on top top of holding your money, then they got to turn around and pay you some interest on it. So put yourself into their perspective. Like, say if I come to you and say, hey, hold $100 for me, you're going to be wondering, when am I coming to collect this $100? Right? And then on top of that, if you said you're going to pay me some sort of interest, now you got to pay me $100 plus 10%, whatever it is. So it's burning a hole in your pocket essentially. And you need to figure out how to make money, because it doesn't behoove you to just sit on money and not do anything with it.
Right. And that's one of the lessons that we should learn from just this scenario, is the fact that in order for banks to turn their liabilities into assets, they have to lend that money out and have that money working for them. Now, our money sitting in the bank, I think personally, is a liability also, because it's not keeping up with inflation.
It's a liability to ourselves.
It's a liability to ourselves because it's not keeping up with inflation. Money sitting is not earning anybody any money. Well, except the banks, because they're using the money and they, leave us our money in the form of digital currency. So how do we turn our liability into assets? We do exactly what the banks are doing. We figure out other assets that we can invest in so that our money is making money for us. Having it sit in the bank, it's a liability. The same way it's a liability to the bank, it's a liability to us too, because we're losing money. The value of it. We're losing the value of it. And again, banks don't even keep their own money in the bank. So why should we? Now, a good place or a good amount to put in the bank is your reserves. Like how banks have reserves of 10%, we should have a reserve of about 3 to 6 months of our savings in the bank where we don't touch it. It should be stored there because it's a storage facility. And where we run into trouble with the banks is we use it for other purposes other than a storage facility. Now, for our major...
Are you ready to open up that can of worms?
Well, give me your thoughts. What are your thoughts on this situation? If you don't put your money in the bank, where else would you put your money? Let us know in the comments. What are your thoughts on the fact that banks don't even keep their own money in the bank? So why should you?
And the can of worms I was referring to, as you were saying, so are you using the banks for something other than a storage facility? And probably 100% of everybody who is watching this video probably has to say, I'm using it for more than a storage facility. Why? Because do you own a home? That means you might have a mortgage. Do you own a car, or not even own a car? Does the bank own your car and you're paying them payments? Let me rephrase that. Do you have a credit card? Do you have a personal loan? Do you have some sort of personal line of credit? Whatever it is, if you've answered yes to any of those questions, you're also using the bank for something other than a storage facility. So remember when I was talking about earlier that 90% of the cash before the pandemic, where was it going? Or really the 100% of it now these days, where is it going? It's going to lend money out to the depositors. Ain't that something? We put our money in, but then they flip it, give it back to us plus interest.
Yeah, and we agree to it because we can't afford to buy a house outright. We can't afford to buy our cars outright. And those things are fine. Those are major purchases. They also come with small interest rates. But the things where we
don't know, is it fine? Like just again, I'm oversimplifying this. When you just think about the concept, are you ever okay? And this is a business. Again, it's a business, but just think about it, because once I really started to understand this concept, I was like, okay, I need to do something.
So you mean to tell me I am the business? Go figure.
I'm funding the business. I'm keeping the lights on. So anyways, for examples, right? Like I said, I give you $100 for you to hold it, right? And then all of a sudden I realize I need to make a purchase. And now I'm like, oh, hey, Jimmy, can you give me my $100 back? And you go, yeah, I'll give it to you back plus 10, 20%. Just give me my money back. Right. You know what I'm saying? And again, oversimplifying, but when you think of it from that concept, we deposit money in the bank because we need to store money somewhere, and the banks can't afford to just sit on the money. It doesn't make sense for them. It wouldn't make sense for anybody to do that. So in turn, they're like, I know that you're not going to come get every single dollar from me today that you deposit. So in the meantime, until you come get all that money, I'm just going to flip a few dollars on the side while you're doing whatever.
Right. But we already know this going into it. What do you think is the root cause of why we tend to let the bank manage our money or manage our debts for us?
Well, we don't have it. We either don't know that there's other options or we feel like that's the end of the road for us.
Yeah, it comes back to financial literacy and the way we manage our personal finances. And if we can better manage our finances, then we can only go to the bank for the things that we need, like the mortgage and a car note. But those other things like credit cards where we're paying 25% interest or 19% interest, any interest over in double digits is a problem. And we shouldn't go to the bank for those things. First thing we should be thinking about is, should we be saving more money and only getting the stuff that we can afford? Or should we create another system for ourselves where we basically become our own source of financing? Because if the banks is turning our money into profit for them, couldn't we do the exact same thing for ourselves?
We should.
We should, right?
Yeah. And don't get us wrong, ladies and gentlemen, we do have our money in the bank, but we're strategic with how much money we keep in the bank and what we do with the money in the bank.
We have our reserves in the bank.
Yeah. So it's again being aware of what's going on, and then you make the best decision for yourself as far as what you want to do with your money.
Right. And also your expenses. You have to have your direct deposit go into the bank because you have monthly expenses or daily expenses that you have. That money doesn't stay in the bank very long. We're talking about the money that you just leave in the bank for the bank instead of using it to buy
the rainy
other
day
assets.
Fund. We're talking about the rainy day fund.
We need to get assets exactly like the banks purchase assets. We need to be doing the exact same thing.
Now, definitely click on the link below if you want to learn how to become your own source of financing. Darius, myself, and the Wealth Nation team would love to serve you. And that's what we're going to get into now as far as what your options are for controlling more of your money.
Right. And one of the options is the storage facility in which we use to then go and do other investments. A lot of times, traditionally, what we like to do is save up money, but the money that we see liquid in our account doesn't stay liquid very long because there's other things that come up that we feel like we want. Now, the most important thing that we should be doing is finding a place to store our money until we're ready to purchase an asset. But the thing is, when you use the money in your bank, you no longer have access to that money and you're no longer earning interest on that money. So what we like to do is use a whole life insurance policy. The reason being is because we can use our cash value and still continue earning interest on the entire value as if the money's still there.
Now, I think it's important for those who are new to this concept or maybe don't understand what Darius just explained. Our whole channel is about what Darius just said. So if you have questions, if you don't really understand, then definitely check out all of our videos where we specifically talk about whole life insurance. We can link a few in the description for you just to give you a little bit of clarity and guidance. But the point of what Darius was saying is we looked to other storage facilities and we were trying to figure out what could maximize our dollar, what could give us the biggest bang for the buck. And when you think about your income, you're not always going to use every single dollar. And so for us, instead of keeping the money in the bank and not doing anything, we said, okay, let's look at this whole life insurance policy because it can give us two things. It can give us a storage facility for our capital, and it can also provide a death benefit for us should something happen to us. And we have liquidity to the money that grows inside the policy. And that's what we use for financing our lifestyle, for paying for purchases and things like that.
Purchasing other assets. Because there's...
As opposed to just using our savings from the bank or using credit cards for financing things. We use our whole life insurance policy to do those things.
Right, because let's take a look at two different scenarios. We use our savings account to invest in real estate, to purchase a real estate property.
Traditionally, that's what people do.
We take that money out of our savings account and purchase it. We have the asset, right? But we're no longer earning interest on the money because it's not there anymore. Now take our whole life insurance policy, dividend paying whole life insurance policy that was designed for max cash value. We borrow the cash value and purchase the property. Now we have the property that's earning us interest and we're still earning interest on the entire value that we borrow from our life insurance policy. That's the difference.
So it's just really one other step. And it's a simple step that we add in our process that allows us to have maximum value. And so for those of you who this makes sense, well, again, like we said, we totally welcome you to join the Wealth Nation community. We would love to serve you. And for those who are continuing to just understand, how do I best use my money inside the banks? Again, our recommendation is if you have money in the bank, it needs to be for a specific purpose. There has to be a really big goal in there there, and you have to know what's going on, because you can't continue to allow someone else to use your money better than you when you're the one out creating the income.
Exactly. And if all else fails, always do what the banks do. And
That's
just
a
so
good guide.
happen, banks are the largest purchasers of dividend paying whole life insurance policies.
That'd be darn.
And they use your money. So that means you're buying life insurance for
Them.
somebody else that you don't get to benefit from. So you might as well just cut out the middleman. The whole point of this video is the fact that the banks don't have their own money in the bank. So why should you keep all of your money in the bank? You should be purchasing assets just like the bank. And just so happen, one of the assets that a bank purchase is dividend paying whole life insurance policies. Now, we're not saying to invest in life insurance, because you cannot invest in life insurance policy. And even if it was an investment, it would be a horrible investment.
Yes.
You do not invest in life insurance policies. It's just a tool. It's just an asset that you use to do investing.
Exactly. Yeah. Like we said, one step before the other. And the other thing that we wanted to, or that I wanted to address as you were speaking, we were talking about earlier, like, well, why is this the case? Why do people just keep money in the bank? I think one, it's because of your programming, what you were told to do, right?
It feels good to see the money there.
The
You
ego.
know where it is.
Yeah.
You know what it's doing.
So the programming
Which is
piece of
nothing.
it, this is what you were told to do. The ego piece of it, right? Every time you log into your online bank account, you see the money there. You're like, okay, good job. I'm doing my thing. And then the other thing is just ignorance. We're just unaware. So when we think about all of these reasons, these three reasons that I just talked about, like, where else are you unaware of what's going on with your finances or any other thing, aspect of what's going on in your life? And for us, when we talk about Wealth Nation and this whole channel, it's just about to educate people of everything that's going on with your money. And we start always with the foundation of the bank, because where are you putting your money? You know, once you get your income, where do you put your money? And then what are you doing with it is what's really going to create the true financial freedom that you say that you want for yourself. But if you don't understand the different aspects of your money and banking and investing and so on and so forth, then it might be a little bit difficult for you to really achieve that level of financial freedom that you want if you don't understand the game that you're playing.
Right. So the rule or the idea that we want you to get from this video is, one, don't put your money in the bank, because the banks don't put their own money in it. If you use the banks for anything other than a storage facility, you're going to be charged interest for something that you could have created for yourself. Right? Now, don't get me wrong. You can use credit cards. We use credit cards. We actually like to use credit cards instead of using our debit card. Reason being is there's more perks that come along with it. Whenever somebody's giving out free money, or you think it's free money, then go for it. But the thing is, we pay our credit card balance off at the end of every single month. We don't carry a balance. We don't pay interest on that, because we continue to pay the balance down.
And again, it's strategy. The other level thing, the other reason why we use credit cards is it's another layer of protection for us, because if somebody were to steal the account number, whatever it is, they're not dipping straight into our bank account. So that's another perk, the reason why we use credit cards. So if you're going to use products and services for the bank, you need to understand why you're specifically doing it, and not just taking it up for the perks, because sometimes that's how we get in trouble, when we don't understand the products and services that are available to us.
You don't need to carry over a balance to pay interest on it just so you can build your credit.
No, a whole nother misconception.
Yeah. Now, speaking of protection, we also like to use whole life insurance policies prior to us doing an investment. We get all of our investment funds from the cash value of our life insurance policy to give us another layer of protection, and to allow us to continue earning interest on those funds that we borrowed. So again, not only are we earning money on the investment that we invested in, but we're also earning money on the money that we borrowed. That's basically no longer in the cash value.
Exactly. In addition to, like you said, insurance. It's insurance for insurance.
Right.
For
And
everything.
we have a death benefit.
Yeah, exactly. To that point. So the main thing of understanding where your money is, why is it there in the first place, and is there a way that you can be more efficient? You should always ask yourself those questions. And like we said, if you have more if you need more information as far as what exactly that we're talking about with this whole life insurance world, then definitely check out our next video, where you can learn everything there is about banking and becoming your own source of financing.
Remember to own your own lifestyle.
Or someone else will.